You're trying to decide between day trading to make quick money or long-term investing and waiting for steady growth. Before making that decision, it's crucial to understand what really happens behind each of these strategies. Did you know that most people who try day trading lose more than they win? And at the same time, many long-term investors accumulate fortunes without having to spend the entire day staring at charts. But the big question is, which of these options can take you to financial freedom faster? Stay with me until the end, because we're going to reveal which strategy can truly multiply your money faster and how you can apply it to your own portfolio. Hey everyone, if you're just starting to explore the world of investing, you've probably come across two paths that seem promising: day trading and long-term investing. Each one has its characteristics and promises of quick returns or consistent growth. But the big question is, which of these options actually brings the fastest and most solid results? Many people dive into day trading hoping for quick profits, but the truth is, the risk is extremely high. On the other hand, long-term investing promises stability, but can it really accelerate your wealth-building process? In today's video, we're going to break down these two strategies clearly so you'll know exactly which one could be the key to multiplying your money effectively and safely. So, stay tuned because we're going to explore the advantages, challenges, and most importantly, how these approaches can be applied to your portfolio for the best results. Before we get started, if you're not subscribed to the channel yet, click the subscribe button down below. That way, you won't miss any important tips on how to achieve financial freedom and make your money work for you. Now, let's dive into day trading and long-term investing. When we talk about day trading, many people immediately think of huge quick profits. And, in fact, the appeal of instant profit is one of the biggest draws of this practice. In day trading, the goal is to buy and sell assets within a single day, taking advantage of small market fluctuations. The idea is simple: make quick, strategic buys, sell before the end of the day, and make a profit. Sounds great, right? But the reality is a bit more complex. To succeed in day trading, it's not enough to just have luck or instinct. It requires deep knowledge of technical analysis, charts, and a clear understanding of market movements in real time. And here's the first big challenge: risk. Day trading can be extremely profitable, but it can also be devastating. The market is unpredictable, and even the most experienced traders can suffer significant losses. Why? Because market volatility is very difficult to predict in such a short time. Also, the pressure to make quick decisions and stay focused all day long can be emotionally draining. And, of course, without a well-defined strategy, profits can be fleeting. For those just starting, day trading may seem like an exciting and promising way to make money quickly, but it's important to understand that behind this opportunity lies a constant need for learning, discipline, and emotional control. Without these elements, the risk of losing money is high. Now, imagine you're spending your time on the computer or staring at charts all day, trying to predict what will happen next. The question arises, is it worth all the effort, risk, and time for a chance at quick profit? On the other hand, we have long-term investing, a completely different approach and often a more relaxed one. Unlike day trading, where the goal is to capitalize on short-term fluctuations, long-term investing focuses on steady and sustainable growth. Investors who adopt this strategy buy stocks, bonds, or funds and hold them for several years, allowing these assets to appreciate over time. The great advantage of long-term investing is that it requires fewer quick, complex decisions and more careful analysis of a company or market's growth potential. And when we talk about time, patience becomes key. Instead of trying to predict market movements every day, the long-term investor focuses on what might happen with the asset in a decade or more. Here comes the power of compound interest. Imagine you invest a fixed amount every month or even a one-time amount and let your money grow for many years. Over time, that money starts to generate more money, not only from your initial investment, but also from the interest it generates. This multiplication effect can be incredibly powerful. The truth is, great investors like Warren Buffett have always championed the long-term approach. He believes that by buying shares in solid companies and holding them for many years, an investor can reap huge benefits without needing to monitor the market every second. This brings us to a crucial point. Long-term investing allows you to take advantage of stable growth and reduces the likelihood of being affected by temporary market dips, which is much harder to manage in day trading. But what's more advantageous? Well, that depends on various factors. If you have a higher risk tolerance and time to dedicate to the market, day trading could be an option. However, most investors looking for stability and security tend to lean toward long-term investing. Even though day trading's return might be more immediate, long-term investing, when done right, tends to be safer and, in the long run, just as profitable or even more so. The big question is, which of these approaches fits better with your financial goals and lifestyle? If you're looking for something with less risk and more predictability, the long-term strategy might be your best choice. But if you're willing to learn and deal with the emotional ups and downs of the market, day trading could offer quicker experiences and results. Both have their value, but understanding your profile and willingness to take on risk will determine which is the best fit for you. Now, before we wrap up, how about reflecting for a moment on what you're really looking for in your investments? Do you prefer quick returns with big challenges along the way, or a calmer path with greater security and sustainable growth? The decision is yours, and understanding the pros and cons of each approach is the first step to making the right choice. If you're enjoying the content and starting to understand the differences between day trading and long-term investing, go ahead and leave a like down below. That helps the channel grow and brings this content to more people who also want to learn how to multiply their money smartly. Now, let's continue exploring the advantages of each approach. Now that you know the differences between day trading and long-term investing, it's easier to understand which of these strategies aligns better with your financial goals. If you're looking for quick profits and are willing to handle emotional ups and downs, day trading could be a viable option, but remember the risk is much higher. On the other hand, if you prefer to build your wealth more steadily and safely, without needing to monitor the market all the time, long-term investing is the more solid choice. Patience and a well-defined strategy are key to reaping the benefits of this approach. The truth is, there's no one-size-fits-all answer. Every person has a different profile and risk tolerance. The important thing is to know which of these approaches matches your goals and the lifestyle you want to live. Most importantly, regardless of the strategy you choose, continue learning and improving your financial knowledge. That way, you'll be better prepared to make smart decisions and build a prosperous financial future. If you like the content, don't forget to leave a like, subscribe to the channel, and turn on notifications to keep receiving valuable tips on how to achieve your financial goals. See you in the next video.